people have to start to, and this is hard to, people just won't realize this, but you have to shape your mind to buy the fear and sell the greed versus the opposite, which is what human emotion makes you do. It certainly seems like we're getting there, right? We just breached 30,000 for the first time since 2021. And again, we are getting a bounce here because it is a technical level. In fact, might as well get my charts up so we can kind of take a look. But you can see here very clearly that this level here is where we finally saw that support, which makes a lot of sense, right? And if we just go back and kind of rehash what we talked about, I think a month and a half ago, we were talking about how Bitcoin was in a bear flag pattern formation, right? So you had the high from 69,000 down to the 33,000. And then again, notice how all these highs align, all the lows align, staying nicely consolidating inside of that. And that is, again, a bear flag, or in spirit of bear flag. Basically, what I mean by that is if you were to look at this pattern on 1,000 charts, approximately 80% or so would be breaking down. That's what happens to them. So again, when we're looking at technicals, remember that it's all about probabilities, right? So we just try to look for things that happen more than they don't happen, and then we go with that direction. The more, obviously, the higher the probability, the better. But you can see right here, we are at support right now, and we're getting a little bit of a bounce back to 31.6 after we reached 30,000. So in general, what I've learned is that levels that we think shouldn't break, they ultimately do, just because it's the psychological nature. It's like, if you tell everyone to buy at a level, well, inevitably that level will get flushed through because everyone's betting on that horse, essentially. So that has me a little bit concerned about this 28.5, 29, 30,000 level. I do think that we might have made a short-term low with this Terra Luna UST kind of craziness in Bitcoin. So I did go long yesterday and accumulated a little bit over the last 24, 36 hours on Bitcoin just for a trade. So just looking for a bounce. I do think there's a small chance we could get all the way back to maybe 38,000, which would be a retrace to the line that we broke down from. That's kind of called the retrace to the scene of the crime play. But the one thing I would love to share with you is take a look at this. And this doesn't look pretty, but this is kind of so 20,000 is my best case, right? For me, it's like, I can't see it not going to 20,000. I think there's probably an 80% chance that it goes to 20,000 for me. There's also another angle that I'm looking at, which has a price target of 12,000. If you take the high here at 69,000 to the low here of 33,000, that's a $36,000 drop. If you take the high here, 48,000, and you drop that same amount, 36,000, you get a price target of 12,000. So in technical analysis, we refer to that as a measured move, right? So this move here is equal to what this move ultimately could be, right? So the idea there is a potential for a measured move gives us $12,000 as a price target. The only reason why I think that has some credence to it is if you think about previous bear markets for Bitcoin, how much does it drop? It drops 80 to 85%. Well, if you calculate 80 to 85% from 69,000, it gives you right around 12,000. So playing with the charts, and by the way, for everyone watching this, it's one of the best learning tools in the world is to just play around with things. See what happens. You'll be amazed at how things kind of align when you kind of look at stuff. So, I mean, it just for sure is a major support level, right? So you had the high in 2017, and then you had a move up here, and then you pulled back down here, and then you moved up here again. So anytime you hit on a certain area multiple times, it tells you that there's resistance there. Finally, we broke out above it. But a retrace to that, there's no doubt that that would be a technical level as well. So you could technically say, okay, you have the 80 to 85% correction, you have the measured move, and you have that major support. Now, again, I think it's important, and I think you'd agree with this, Greg, is that, by no means am I someone who's going to say, all right, I am only going to buy Bitcoin if it gets to 12,000, because what if it goes to 12.5 or 13? So basically for me, I'm looking at my longer term accumulation zone probably being just above 20, all the way down to probably 10, meaning that it could go lower than 12 too. I don't really know, but you want skin in the game and you want a dollar cost average. I think that's the biggest thing. And in all fairness, there's a lot of people out there that, you could do it at 30,000 here. And I think that's more than fine if you have that long-term horizon. I'm more of a shorter term trader, so I got to be a little bit more nimble at these levels. Makes a lot of sense. In fact, that's been one of my kind of key points about where I ultimately think the S&P is going to go, is that if you look at it, we are hitting some support here, but if you look at this longer term trend, right? So this was the trend where it really goes all the way back to 2009, where the uptrend started in the market. And when we got into this kind of cycle of insane money printing because of the pandemic, the markets just took off. And look at the angle of that move versus the angle. And by the way, back here, and you know this, Greg, there was QE already. So it's not like there wasn't QE over here. It was just not the extent that was put into the market here. So in the very least, it makes a whole lot of sense that you would head back towards this area, which just so happens to be pretty much smack in the middle of that longer term trend area, right? So that's exactly kind of what I'm thinking too, is that the Fed ultimately, the Fed doesn't want to see this happen, because I do think that they understand the effects of it. It could push us into recession if the stock market crashes enough. And question is, can they come support it if it does drop at a certain point? But I do think that's very likely to see that move back. At least the one that kind of jumps at me is like, okay, well, the Fed wants to get asset prices back down. So let's say we do go back to the pre-COVID highs right here, which on the spiders is around 350 or give or take. At that point, does the Fed still have control, or are we spinning out of control into a recession that now they don't have the same tools, because inflation maybe is still 5 or 6% at that point, and they can't print the same amount of money to get us out of that? And that's what I think the market is going to deal with. So you have this type of correction going on now, which is the market saying, oh darn, interest rates are going up, we might see a slowing economy, but the market hasn't even started to broach that later, which I think that will later this year, which is, what if we go into a recession, and how does the Fed then get us out? That's honestly what scares me the most, is that, at a certain point, they run out of the ability to do anything. And then that's where you have this 100-year cycle. We talk about 100-year cycles of the pandemic with the Spanish flu. And then, you're coming up within the next less than 10 years to 2029, and you're talking about potential depression. And it's weird because you can almost see the writing on the wall, which is, okay, we slip into a recession, it gets worse and worse because the Fed can't print us out like they used to. And if they do, you see 20-30% inflation. And then what do? Just step back and let the economy crash and absolutely reset, which is kind of the worst case, but it is something we have to talk about. You have a much higher, and I think I've seen stats on this, a much higher percentage of the US population is now invested than they ever have been before. Part of that happened, by the way, just in the since COVID, right? So many people, they were home, they didn't know what else to do. Oh, let's get into trading. Crypto is great. stocks are great. GameStop, AMC. So I do think that it's more tied directly to the economy, meaning if you see a lot of people with 20, 30, 40% losses in their investment accounts, they're going to spend less money, which then slows the economy as well. Yeah. And I just brought up the Qs chart because this was a level that I actually tweeted about a few days ago, this 300 level. You can see the beautiful kind of confluence of levels here, pivot, and then low pivot here. And you're getting this nice little bounce today on the Qs. Not a huge bounce, but I mean, we are up now over 2%, almost 2.5% on the QQQ. So I do think that that's worth keeping an eye on. It's just a short-term level for me, but I did pick up quite a few of these kind of beaten down tech names. And by the way, I mean, have you seen some of these tech names? They've just been absolutely demolished to points that even I am surprised at. I mean, the first 70%, I was like, okay, that was needed, and now it's like at 80, 85%. I'm like, okay, this is pretty crazy now. One of the things I'm watching very closely, and I know you get these out very quickly, so it's worth discussing, is the CPI number tomorrow. I think the CPI number is going to be epically big for this market. The market wants to see peak inflation. If we get a slightly lower than 8% print on that CPI, the market will rejoice. If it's higher, watch out. And here's the 10-year yield chart, and you can see we broke out. But my guess is we're going to retrace and re-see this line before we make our next move up. But been a remarkable move in the 10-year, the 20-year, the 30-year. I mean, people with mortgages, like you're saying, I mean, it is just insane how quickly the bond market has done its thing and pushed yields up here. But again, it is starting to pull back. 10 years back below 3% now. Only thing I can think about is this, and again, I could be wrong, but is the bond market sensing there's two possibilities. One, the bond market it knows already that maybe the headline print tomorrow will be slightly lower. That'll make people relax a little bit about the inflation situation, which would be a reason why yields could come back in. Or the other one is that they're saying, hey, listen, the economy is going to slow dramatically later this year. Therefore, yields are going to come in because people are going to be buying less, and inflation will get under control that way as well. So it's one or the other. Honestly, I don't know. It's one of those things where as economists, we just kind of look at it and we make our best guess. you know, something like a Roku I'm nibbling on down here. You have lots of support. Yeah, isn't that incredible? But like, for instance, their earnings were actually they weren't horrible. The stock actually was up on earnings, but because of the market, they've been punished. So, you know, taking a look at names like this, down like this, and by the way, look at that M pattern, and then it almost looks like a Bitcoin chart, right?
Yeah.
Except a lot further along in the scheme of things. And I think it's important for people to recognize that, I mean, if we are witnessing a .com-ish type scenario, then where crypto's going is to demolish, you know, 90+% of all the cryptos will essentially cease to exist, which is probably healthy for the system, right? I think the best of breed will survive and they'll thrive just like Amazon did back in .coms. And obviously it's gone way, way higher than its highs back then. But, you know, I think there's like 19,000+ cryptos at this point. That there's no reason for it, no reason whatsoever. And it's not healthy for the system, frankly. It's kind of like too much cancer in the system, if you will, where you have to kind of get rid of it. You want the best to survive and thrive. Very Darwinian. It's kind of where I'm thinking, whether, you know, if you're someone like me, and we just talked about it earlier, where, you know, you have to at least see the S&P get back to that pre-COVID level. Well, that's still quite a ways away, right? I mean, you're still talking 10+% just to get to those levels. And if the NASDAQ continues down with that, the impact on the NASDAQ we know is great on cryptocurrency, which then spells even more downside in the cryptos potentially. Then you have to think that that's the angle of where this ultimately ends. I don't think Bitcoin's going away. I think especially, first of all, I think regulation is needed, and I think it will be good regulation. It's not to say that every rule is going to be perfect. We know the government by far is not perfect, but I do think that there's enough jobs that are built on the blockchain and cryptocurrency, and even Microsoft buying Activision Blizzard, you know, where they're going to get into stuff, NFTs. I mean, there's enough jobs where the politicians won't regulate it out of existence. They want it to stay around, and that's ultimately going to be a good thing. And I think I've said this before, but like, you know, you have to get Bitcoin and cryptos to the point where more people feel comfortable investing. So what does that mean? Well, you know, one of the reasons why I don't put a lot of money in cryptos or in my crypto account individually is because if it gets stolen out because I clicked on a link I didn't mean to, well, guess what? It's gone for good, right? Versus FDIC insurance with stock accounts and banking accounts. So there has to be certain things done where a pension fund feels comfortable putting $1 billion in Bitcoin or crypto, where, you know, mom and pop that are 85 years old, it's part of their allocation of their retirement. You know, that type of thing has to happen. And we do need the government to come in and lay down some ground rules. In all fairness, you see this almost every cycle. Like if you look at the .coms, there were a lot of people that it took 5-10 years for them to reinvest in the stock market. And then unfortunately, what ends up happening is they reinvested in 2007 when it got like the market would never go down. And then we know 2008, 2009 happened. And then the same thing. I mean, for years after 2009, every year, 2010, 11, 12, 13, 14, it was always, you know, where are all the small investors? They're not back in the market yet. Well, guess what? COVID brought them back in when the markets just continued to go up. When we only had 3% corrections for like a year, that was the biggest drawdown for over a year. It brought people in because they thought they couldn't lose, right? It's the easy money train. And then guess what happens? It's the top. And here we go again, you know, and again, you know, people have to start to, and this is hard to, you know, people just won't realize this, but you have to shape your mind to buy the fear and sell the greed versus the opposite, which is what human emotion makes you do. And the best way to regulate emotion is by doing proper share size. And I'm sure you did, Greg, in terms of like, you know, when you go into AVAX and you leverage 10 times, you're going to be, I mean, every tick, you're going to be freaking out. But when you do it with like the proper allocation, like 5% of your portfolio, well, then you know what? Yeah, you might make decent money if it does, but you're not going to freak out about it. So you really then can rely on the real thought process. I think once you get, and I think in those situations, it becomes, you know, just smart to be safe, right? Because if it does go away, you lose everything versus if you're wrong on an entry, maybe it drops another 10 or 20%. But if all of a sudden, let's say it gets halted and you can't even, you know, you just don't know in those scenarios. So the support on AVAX, I actually picked up some down here too. I mean, this is just such a good level for at least a near-term bounce. I mean, I actually picked up some Solana, same thing. I mean, I love multiple trend lines, pivot low. We went right there. Plus you had this extra support right here. Even Polkadot, take a look at Polkadot. I picked this up yesterday. But look at this little pivot low right here, hits it perfectly. And then look at that bounce, over 10% already just there on that bounce. So again, you know, even if we are in a bear market, and I think you'd agree with this, is that there's still lots of opportunity. It's the more volatility there is, the more opportunity, as long as you know what you're doing.